Welcome to another video. Today I will be performing a full multi-time frame analysis breakdown on a pair. So we will be taking it, dissecting it both from a technical and order flow perspective by checking the COT data, so the commitment of traders, what biggest banks and institutions are currently doing in the market, so the non-commercials, which are the biggest speculators in the market. And by using our multi-time frame technical analysis skills and the COT data, we will be determining where is the best area to be looking for a potential trading opportunity on the actual pair that we are analyzing. Now, if you're new to the channel, I'm a top author on the TRADINGVIEW platform and I share free education and analysis on all my platforms daily. So I suggest you subscribe to the channel for more free education and analysis and watch the video until the end because it will be filled with value. Okay, so what I want to do in today's video is give you an update on the situation that we have at the moment on GBP AUD and where we can be looking for the next possible opportunity. Now, if you remember in our previous analysis on this pair that I will link in the description of the video for a very large amount of reasons that you can go and check out in the previous video, as I just said, that is linked below, we wanted to see on this pair the market make this move to the downside, which the market has now given us. And in fact, we were able to capitalize on the weakness of the pound, not specifically on GBP AUD, but we capitalize on GBP USD, which, as you know, is correlated to GBP AUD. And you can find the complete previous analysis in the description of the video. I will now go and make a full breakdown for you of the pair and show you where we can be looking for the next possible opportunity to capitalize on GBP AUD. And obviously, as usual, I will try to keep the analysis as educational as possible so that you will understand which key concepts you have to apply to your own trading. So let's start the full top-down analysis from the monthly to the 4-hour time frame. We will also check what we have from a COT perspective, so order flow perspective, and then we will see where is the opportunity. Now, on the monthly, what do we have? We have a market that clearly has created a strong move to the downside with this monthly impulse to the downside. What this impulse broke in its move to the downside is a very important structure level, which is this zone here. In fact, this zone here was a very strong previous resistance here, broke to the upside, the market retested it here, starting all this move to the upside. Again, the zone was acting as support here, again acting as resistance here, broke to the upside, acting as support here. And now that the market has broken this zone to the downside, we expect the market to go and retest the level, creating a retracement from this strong impulse to the downside, because as you know, the markets never move just in one leg. You will always have retracements after an impulse. And that is why you want to see a retracement after this impulse to the downside. Now, specifically when it comes to measuring the impulses, what you have to do to measure an impulse, you have to measure a retracement from the impulse, you have to take your Fibonacci on the impulse itself. So if we want to measure the possible retracement from this move, we have to take our Fibonacci from the high to the low of the impulse. And what we can see is that the 0.382, so the first strong Fibonacci level, is lining up perfectly with this very strong supply area. In fact, in all of this impulse to the upside, there is one candle which is not related to the move with a big body, which is this red candle here. So we definitely expect from this area the market to find the liquidity to actually start the next move to the downside, because remember, retracements in the market are necessary because they provide the liquidity for the continuation of the overall trend. Now, if we go down on the weekly time frame, what kind of situation do we currently see? Just a quick reminder, make sure you comment below and you let me know which topic or pair you would like me to cover or analyze in the next video. Now, on the weekly, we can see a completely different scenario, because in this move to the downside, there is one candle which is not related to the move, which is exactly this green candle here. And if you remember in our previous analysis, what did we say? When the market was here, okay, we said from here we definitely want to see a rejection. Not only we want to see a rejection here, but on the daily we want to see the W formation complete, as I said at the beginning of the video. That is one of the reasons for which we wanted to see this move to the downside on GBP AUD, but actually on all GBP pairs. So now that the market has rejected the structure, what can we expect? Can we expect the market to continue lower? Possibly yes. Why? Because on the monthly time frame, the market still hasn't reached the low. Okay, and if the market will reach the low, we will have the possibility from there to make the retracement and create this big monthly head and shoulders, meaning that we will have a wave to the upside from a monthly perspective, which will be a strong daily uptrend on the daily, because always remember that the different time frames will have different trends. Now, going down on the daily time frame, what is the situation? Now, as we said in the previous analysis, we had a situation on the daily where the market had created this W formation, retesting the structure that we had here, and from this level, we definitely wanted to see this move to the downside. Go and check out the previous video. And now the market has given us the move to the downside. Now, as on the monthly, we want to see the market reach the previous low before starting the retracement and create the head and shoulders. The same concept applies also on the daily. Also here on the daily, if the market breaks the neckline, as it has actually, we want to see the market as well here hit the low, make a retracement and create this head and shoulders and go to the downside to actually reach the monthly low, as we have just seen from a monthly perspective that the market has the possibility to actually do. So how we will be approaching this? Now, before I show you how we will be approaching this pair with students, let's go and give a quick check at what we have from a COT perspective, so commitment of traders. What the biggest banks and institutions are currently doing in the market, and by checking their orders, we will be able to gain an edge over our competitors in the market. Let's first see what we have from a GBP perspective. Now, if we check the pound, we can see that we went from plus 35k net positions, so way more longs than shorts, with 76k longs and 40k shorts, all the way down to a situation where we have way more shorts than longs, with 63k shorts and 26k longs. In fact, the short exposure has been increasing, and we are currently with the last report at a 31.2% short exposure and only 22% long exposure. So we can still expect in the long term some GBP weakness. If we can see what we have from an AUD perspective, we can see that AUD has been getting quite strong. In fact, all AUD pairs have been making moves to the upside because hedge funds, so the big boys in the market, have been longing AUD USD and actually all AUD pairs, because we went from minus 54k net positions all the way up to a minus 694. So clear increase on the long side of the market, bringing the exposure from 23% to 42% with 44k long positions. So longing AUD pairs means shorting GBP AUD. And yes, we can expect more continuation to the downside. However, as usual, guys, trading is reactive, it's not predictive. What does it mean? It means that even if you do the complete analysis, you know that, as we have seen, on the monthly, we would like to see the continuation to the downside to go and test these lows. Even if we know that on the weekly, we have a strong rejection of the structure and we want to see the continuation to the downside. Even if we know that on the daily time frame, the market has broken the structure to the downside, we can't just take the short, right? We need to see all the confirmations, because only then we have the best probabilities and best risk to reward. So what does this mean? It means that we want to see the market go and hit these lows. Then we want to see the market give us the retracement. And only then, at this structure level, where we have the possibility to actually create this inverted head and shoulders and make the move to the downside, at that point, there is where we are interested in this specific pair with students, because at that point, here with students, we will be monitoring price action on the 4-hour time frame, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short at that point with a good probability and good risk to reward for the continuation to the downside, creation of a lower low, and for the market to go and hit the monthly lows. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis and education for all of you. Also, make sure you go and check out the mentorship program. It's a very complete program. We first learn all the rules of my rule-based strategies, and then you trade them live with me each and every day. In fact, I give you a new daily market breakdown showing you exactly how to apply these strategies with the entry, stop, and take profit, as well as answering every single question that you have every day. So I really suggest that you go and check it out, or you can go and check out the next video.